All right, here we go, people. Welcome everybody who decided to join. For everybody else, you'll see it on the recording. But let's get to jump into this thing real quick. Hopefully, people can hear me. If you can hear me, just hit me a thumbs up in the chat. All right, so let's get into it. Something driving. If somebody can hear me, can y'all give me a thumbs up in the chat that you can hear me? Anybody? Is there a heart in the house tonight? Something is not clicking on my side. All right, yeah, you can hear me. All right, perfect. I was just making sure because my sound was over here acting a little funky. All right, thanks. All right, here we go. All right, let's start chopping this fable up. The title of it is, winning in life is not an option. Let's just keep it simple. Success leaves clues. Failure leaves clues also. So that is something that's important that people need to understand. Success leaves clues. What successful people do, if you follow the clues or follow the blueprint that they have, and I'm not saying you have to do it exactly 100% like them, but if you follow the blueprint, you will lead to success. But in the inverse, if you follow the blueprint and clues of people that are not successful or people that have failed in life, you're bound to do the same thing. This is a hill I will die on, and I will say this all the time. If you think that you can have kids and you're going to tell them what to do, but not show them what to do, you're sadly mistaken. And what I mean by that is if you think you're going to sit there and have kids and you're going to tell your kids, oh, they need to save and invest, but you don't save and invest, or you don't put money to the side, or you're always broke, but you're telling them, oh, do as I say and not as I do, the kids are going to do what you say. I mean, do as you do, not do as you say. Excuse me. And I mean, it's many examples out there. I'll bring up one just because this one's near and dear to my heart. Uh, so my in-laws, so my wife's parents, they came from a place where jobs wasn't plentiful, money was hard to come by, and they worked their butts off. They worked their butts off, and when they got paid, it wasn't squandered away. They've always had an appreciation of the value and the dedication it took to make the money and how much time away from each other and away from the kids and the time that's allocated to acquire the funds that they didn't just squander it away at every attempt that they and every chance that they can get. And they lived that life. They didn't just say it, they lived it. They still live it today. And the thing that I appreciate about them is they lived it, so then their children, so my brother-in-law and my wife, they have the same mindset of just not squandering money away. And I appreciate that because it's funny. When I say as you do, your kid will follow, not as you say, because now we're going to the third generation. We talking about my nieces and nephews. I go take them out to anywhere and just say, hey, go ahead. Go get whatever you want. And they're still looking at, okay, uncle had to spend time to get this money. We're not going to just go crazy with it. They'll go, if it's to the grocery store, to the store, hell, even ice cream. They trying to convince me not to spend my money on them. Now, what other kids gonna do that? When you say, hey, you can have whatever you want, they say, no, don't worry about it. We can go just do something at home. But they understand the baseline of something that the grandparents instilled into their parents, now it's being instilled in them. Because why? Because they see it every day. It's not a game that they play on the weekend. It's not an on and off switch you turn on. it's a mindset, it's a behavior, it's how things are done. You know, for the life of me, when I was growing up in Detroit, I used to always hear, I had uncles, aunts, parents, they always saying, oh yeah, when you get a job, you got to save 30 and 40% of your income, save for a rainy day. But you giving me this advice. I mean, it was good advice. I mean, hindsight, but you giving me this advice, but you're not following your own advice. So which advice you think that I took? I did exactly what I seen them do, not what they said. And that's universal. But success leaves clues. Failure leaves clues also. Only thing you gotta do is follow the success, and you can get there and do things. And maybe you won't make it to Warren Buffett's, 100 and something billion. So what? But if you made it to 1, 2, 3 million, you're better today than you were back then. All right. So just wanted to throw that out there. Some things that came out on the news that I just wanted to hit up on. That's a good question, Jay. I'm gonna ask that. Can you be too far gone to preach to the kids to do as I say, not as I do? Yeah, no, there's no such thing as too far gone. The thing is, if you want your kids to be better, no matter how far gone you think you are how far gone you think you are, and I'm not talking about you, I'm just talking about in general, you got to make the change first. You have to be a representation of what you want your children to be. You have to be the representation. Trust me, I didn't wake up like this, people. I was 100%, I knew what paying bills was, but everything after that, I was driving fast and taking chances trying to get to zero for the rest of the month as fast as possible. This is a learned behavior. That's what this is. This is a learned behavior. Because trust me, like I said, I was in the parties, I was in the clubs, I was gambling thousands of dollars a day. I had to learn to be this person. And I had to learn the hard way. So that's another reason why I always say you better off making the switch now when you can afford to make the switch, or life will make the switch for you. Life had to make the switch for me. I didn't just go sit there and say, oh, well, yeah, I make $5,000. I'm just only going to spend $2,000. No, it was, you spending $5,000. Now you ain't got no job. You ain't got no choice but to cut back. Life has a funny way of humbling you. So that's why I always say do it when you can afford to do it instead of life making you do it, because it's going to hurt a whole lot worse when life make you do it. And then Jay was just saying on there, you're right about it. My daughter see how I do with shoes and does the same. Found the same love. Yeah. They're going to follow exactly as you do. Exactly as you do. Something else out there in the news. Now, y'all remember, people that's been following this channel longer than day, when COVID popped off, y'all know that I invest in Florida. COVID popped off and I said, well, my days investing in Florida is over, because, of course, the interest rates went super low, the prices went super high, and I said I wasn't investing in Florida until everything right-sides itself. That time is still not here where it right-sides itself. And then I went for weeks during COVID saying don't buy in Florida. The prices don't make sense. The sellers during that time, they're selling based off of pro forma, and buyers are buying based off of pro formas. And the localized economy in Florida, the regular people, not the transplants that's coming into Florida, but the localized people, the majority of them couldn't afford the rent prices or whatever prices that they was asking for when they was buying these houses over. I mean, I've seen people spend $30,000, $40,000 over ass just rushing to get properties. But I said, this is the worst time. And now it's the worst time to buy in Florida as an investor, but it was a good time if you wanted your forever home, you got it at the low interest rate, and you plan on staying there 10, 15 years. And then I went to I went months of saying this. I was saying weeks I said it, but months I was saying, don't do it, don't do it, don't do it. And then I got the feedback. I got the feedback from people investing in Florida. Man, you crazy. What are you doing? What are you talking about? You all out of sorts. And then over the past, I say 8 to 10 months, those same people that said I was crazy back during COVID, those same people calling me to ask them, can I bail them out of the bad situation they're in? It just didn't make sense. If you paying $20,000, $30,000 over ass, that means you need another 10, 15, 20% of extended rents that you already paid based off the base pro forma that you was paying it off of. But the true reality is the economic scales, the job markets in Florida don't pay that much, especially if rent's $2,000 and then you need to have income, and then your tenant need income of $6,000 a month. It's not in a localized economy. Majority of people are not working at six-figure jobs. So when you buy these properties, you was bound to be hurt by it. But report just come out Thursday. New foreclosures jumped 20% in October. Now the 20% jump is understand it's coming off a low base, but the state with the most foreclosures, Florida. The area or city inside of Florida that has the most foreclosure, Tampa metro area, the same area I'm in. And most of those foreclosures came from people who bought during the COVID times. So they still had the low interest rate. And it's many of reasons why. It's many of reasons why they're foreclosing on. I mean, some people return back to work. Some people lost their job. Some people gotta go deal with family issues and they move into other parts of the country and they have to go. But the main reason why they foreclosing is they can't even sell the house today at the same price they bought it 3 to 5 years ago. Even if they sold it at the same price, because of all the fees that go into it, because of the interest rate, most of the time they didn't have any rate buy down or anything like that, they still have to bring a check to the table to even sell the property. So what I mean is they bought it for $250, then they came here to sell it for $250 today, 3 to 5 years later, because of all the fees and everything else that go along with it, and because they haven't really paid much of the base principal down, they still got to come to the check. I'm selling it, and I still got to pay $10,000 to make the numbers even up. Because, of course, they was the highest bidder. They was in there doing bidding wars. They doing all this extra stuff. So people can sit here and say that nobody warned them, but somebody was out there warning them. But they had short-term memory, and I've always said, and people who've been following the channel, I said, if you want to know what this situation is like, you need to study previous time when you see a hyperinflation rate crash down. What happens? It's just the numbers. That's all it is. It's just the numbers. I didn't have no dog in the fight, and like I said, I didn't say I'm not buying in Florida to convince people not to buy in Florida so I could buy every property I could. I haven't bought a property in Florida since 2019. Now I went to other locations, but I just didn't do it in Florida. It didn't make sense, especially with the interest rate. The insurance rates increasing, property tax increasing on second, third, and fourth homes. It didn't make sense from a cash flow perspective to even do it. But a lot of investors don't actually run the numbers. They just out here doing what they see people on TikTok or Facebook or Instagram. That's what they say and doing. They just run out doing it blindly, and they didn't understand the numbers. So while people sit here and ran to Florida and raised the prices of houses, I just pivoted to other states where a lot of investors wasn't going. To the Oklahomas and other parts of Georgia that wasn't allowed. That's where I made my bones. And I still got great deals, better deals than I would have got in Florida at the time. Will Florida correct itself? Yeah. But we're not even close. And again, this 20% foreclosure rate, that's nothing. Because the baseline number is so low, a 20% jump in foreclosures, that is nothing. This is nowhere near 2008. This is nowhere near the Great Financial Crisis. Some other states that's been hit with foreclosure and the foreclosure rate is jumping. South Carolina, Illinois, Texas. Texas, they had that big boom with COVID. Everybody moving in, especially from California. jacking the prices of houses up. So foreclosures is going on over there also. South Carolina, that was another place people migrated to during COVID. But most of these foreclosures are people who bought in with and they wasn't paying attention. Yeah, the interest rate's good, but you have to stay in. Lower interest rate mean higher price. Now the interest rate is triple for some people because some people got 2% mortgage rates then. Now the mortgage rate is 6%, so it's triple what they bought it, but they still got to sell the price at the same price they bought it for or higher, and that's not how it works. When interest rates go up, prices come down. So just wanted to throw that out there so people understand what's going on around America. So if you in one of those pockets or you live in a place where a lot of people migrated to during that time and they got the low interest rates and all that, understand they paid a higher price. And then when they trying to, companies saying come back to work or government shutdowns or layoffs and all this other crap that's going on and people lose their job, be prepared for the reckoning that's coming along with it. And trust me, Tampa's feeling it. We talked about neighbors. I had a house on the corner. It's been up there for about 5 or 6 months now. Nobody don't even come look at it. Nice house right there on the lake, the whole John. Nobody don't even come look at it. So yeah, let's see what else we got. All right, so now just the market in general. I know people want to talk about the stock market in general. Yeah, we hit a doozy, didn't we? We hit a doozy for the past 2 weeks or so. And I'm gonna get to your questions on the question side there. Just give me a second. But we hit a doozy. We had a sell-off. Good sell-off. But y'all remember I said a couple weeks ago on my retirement accounts, I did lower the distribution because I thought the market was frothy. Guys, trust me, I am not a market tacticianer. I'm not a timing of the market guy. When just things look out of sorts and you can compare them to times of history when it was out of sorts, I just make decisions off of that. And then, like I said, the PE for the S&P 500 was at 30. Historically, it's at around 12 to 15, and then we was extended to about 18, 19, but right now we're at 30. So that's why I start taking contributions out of the retirement funds and all the other funds where I was dollar cost averaging. I just took the amount that I was putting in out, and I didn't know when the come down was going to happen or the drawdown in the market was going to happen, but I knew something wasn't right. So we hit the 5% mark on Friday when we kept selling off. We hit the 5% mark down on the S&P 500. Got a little rebound coming into heading into the December months. Santa Claus rally, all that stuff. So we got about a 5% drawdown. Are we at the bottom? I'm not sure. But if you remember from last week's video or the week before's video, I said when the market goes 5% down from the all-time high or from the high, that's when you start allocating capital. So that's what I'm doing. As far as the individual stocks go that I've been talking about for a couple weeks on this channel, SoFi was drawing down. Of course, I kept buying SoFi on the drawdown. I've been buying it all week, actually. Oscar, we talked about. I like the stock, but I hated the earnings, so I did not buy anything else on Oscar. The earnings I thought was absolutely terrible, but the stock proceeded to rally. It then came back down to about $13. That's where I'm at. The options I still have on SoFi, those are out to June. I still got those. FISV, I still have the LEAP options on those. Kind of kicking myself. I jumped in those too early. Should have waited it out and let that breathe a little bit, especially after the terrible earnings that they had. But live and you learn, right? What else? QBTS, I sold that one. Target, I sold that right before earnings also. So I don't have those positions no more. But as far as Target earnings, Target still got work to do. Target still have to find ways to bring people into their stores because they had a lot of hiccups, a lot of mess ups along the way. So, but yeah, I did exit those right before earnings. Not saying I was trying to time it. It just didn't look like it was, it was piecing together. I have a Target right down the road from me, and I haven't seen no just looking at traffic indicators, it just didn't look that well. So I got out of there for a slight win. It wasn't a huge win. It was a slight win, damn near break even. So it wasn't like I was, I made a crap ton of money on that play before I exited. QBTS, I got out of that just because it was a lot of craziness going on with the market, and there was a lot of sell off talking about the AI movements and structures and that. So I got out of that for a loss. I'll admit I got out of that for a loss, but everything else I'm still holding it. I'm still playing it for the longer run, and I've been dollar cost averaging on the crypto space. I know 2 weeks ago I said I caught the 99 on Bitcoin, and then now we're sitting here at like 83 or 84. People drugged me in the chat on that. I mean, not in the chat, but in the comment section after the short came up about that. But I just kept dollar cost averaging. When it got down to 95, I bought more. When it got down to 90, I bought more. When it got down to 85, I bought more. I haven't bought none at the this 82 level that we was at yesterday, but I just keep dollar cost averaging. I'm not sitting here saving all of my nickels and dimes, and then as soon as I see a price come down, I just throw it all in there. It's just dollar cost averaging. That's all. I'm cool if it keep going down. Matter of fact, I want it to keep going down so I can get more Bitcoin, more XRP, more Ethereum. I'm okay with it down. I'm comfortable in this environment. So just keep dollar cost averaging. That's all I'm doing. Let's get to some of the comments here. Well, I mean, it don't even need to be about. So what Jay is asking, we are on the topic for people that just joined. We is on the topic of, you have to be the person you want your kids to be. You can't just tell them what to do. I mean, it's not about showing them. Because he said, so show them the bank accounts. I showed them the bank accounts now. Don't hide it. Show them. They still don't understand the grand scheme of it. I mean, kids don't understand the grand scheme of it. You can show them the bank accounts, but I hope you sitting down and having a full-fledged conversation with them about, hey, this is how much money comes in, then I spend it for, I'm just making up stuff, mortgage, car payment, lights, gas, phone, water. This is how much is actually left. And then if you add in my habits that I shouldn't be doing, but I'm showing you I'm doing them, then I take this way, then I have nothing for that. But if you just going in and just like, oh, well, you see the bank account, I ain't got no money, then go ahead. They're not gonna be scared that you don't have no money. Be like, well, if he telling me to do something opposite, then this is my dad or this is my mom telling me I should be doing something opposite of what they doing. Why ain't they taking their own advice? If the advice is so good, why are you not taking your own advice? And they just gonna continue to do what they see being done. All right, dollar cost averaging. What that means is, that's another question on there. What is dollar cost averaging? Dollar cost averaging is just setting it up to say that you have X amount of dollars to invest in something over a long period of time. So let's say you get paid every week. You get paid every week. But no, you get paid every week. So let's say you allocate $50 per week to invest. So you just do that. You just $50 a week, $50 a week, $50 a week, $50 a week, $50 a week. That's what dollar cost average. No matter if the stock market's up, no matter if the stock is down or crypto is down, no matter what, you just keep doing, because it will average out your cost basis over time. So that's what it is. So if it's $100, if it's $1,000, I'll give you the same advice. I tell my son, I said, and I'm gonna use the same example of the S&P 500 coming down 5%. So what he needs to do is he needs to figure out how much he can invest. So let's say the number is $3,000 a month. That's what he can invest. So when it comes down 5% from the high, then you still setting aside the $3,000, but you only putting in $1,000 every paycheck. So then when it drops 10% from the high, then now you're putting in $2,000. Then if it drops 20% from the high, now you're putting the whole $3,000 a month, and you keep putting it in, you keep putting it in, and you keep putting it in. And then if it goes below that, now you still have that cushion for all the other months that you didn't put, where you was putting $1,000 and $2,000, but you were still setting the $3,000 aside. So you could dump a boatload there to try to catch it at 25%, 30% down, just to have a good basis. And you just keep putting that money in over and over and over again, and then the basis will smooth itself out. That's what dollar cost averaging is. Don't worry about where the market's up, down, or indifferent. But the people in my family household, we dollar cost average a lot on the index funds, the S&Ps, the Qs. We dollar cost average a lot on there. When it comes to like individual stocks, I have money set to the side. If I see a price that I like, I strike. That's really what it is. But yeah, so so what else we got going on out here? No more questions on this side. Berkshire Hathaway, they jumped into Google stock. So just want to throw that out there. They made a big bet on because people that don't know, Berkshire Hathaway is not a huge tech. They don't buy heavy into tech. They haven't naturally. But only ones that you know of is Apple, which they got in super late, but they made a killing off of. And then now they jumped into Google, and because Warren Buffett's in there, I mean, and it's big headlines because Warren Buffett is in the tech space. But Google, he put a boatload in there on Google. So that's news out there. A lot of, if you're wondering why the market turned down, it's a lot of factors in there. It's selling news from the government shutdown. Because you remember during the government shutdown, it kept going up, kept going up, kept going up. And even though we was in the government shutdown, people didn't have jobs. People was losing their paycheck. They couldn't afford groceries. You know, we even had SNAP benefit people. They couldn't get their SNAP benefits and all that. The stock market kept rising. So when they signed the deal, and if you look at it, the day that the deal was signed, the stock market rolled over. So it was, they bought the rumor that the deal was going to be done the whole time, and then they sold the news when the news came out. So that's what happened with the market. And then it rolled over, and then of course they got the narratives of saying that, oh, AI, people don't believe the AI bet is real anymore. And then if you've seen on, I want to say Wednesday of this week, we took off on NVIDIA's earnings. It shot up about 700% on the Dow. I mean, $700 on the Dow. We was up about 5 or 6%, and then we turned around and crashed. That was on Wednesday. So those are just some factors in there. People are nervous, scared, don't know where the big money is going to go. Are they going to rug pull us if we go sit there and buy up the stock? Are they going to be selling off to us? And then next thing you know, the retail investors can't hold on to the stock. So that's what we got, a lot of fear. And that's why the volatility index is up and down, because nobody is quite sure where the mind's eye is at. Right now, the VIX is at 2343. A normal market, the VIX, and that's a volatility index, around 15, that's normal. Anything below that, that just means we're in a hella bullish market. So we're at 2343 right now on the VIX. Other questions out there. Be mindful of the company you keep. You will mimic their habits. Oh yeah, I say that all the time. If you rich and you got 5 broke friends, I mean, if you got 4 broke friends, you will be the 5th broke person. But if you broke, but you hang around 4 people that have money, you'll be the 5th person with money. Success leaves clues. The thing is, you gotta go find the clues. You ain't gonna be able to sit in the house playing video games and then somebody gonna come drop off $1 million at your front doorstep. You gotta do the work. If you're not doing the work, then what are we talking about? But again, life is not hard. We as people make it hard. I mean, it's simple. Go to work. You find some place to live that is less than what it costs that you make at work. And then you make that situation work. I don't care what it is. If you in a 3-bedroom apartment now and you need to downsize to a 1-bedroom apartment to afford it, that's what you need to do. Stop worrying about the peer pressure, the hyper, everything that they're doing on social media. That's what you need to do to get ahead. People, I did it. I went from a 3,000 square foot home to a 600 square foot apartment. I went from paying $1,400 a month in mortgage to $600 a month in rent. And I had roaches. Why? Because I was willing to do anything to be successful. So yeah, I knew people laughed. I didn't care. But that difference from $1,400 a month to $600 a month, that's $800 a month. $800 a month invested in the S&P 500, and I did that over 30 years. That's a couple $1,000,000. Who laughing now? That's the secret. That's the secret of it, people. Y'all can't be worried about what everybody else thinks. Everybody else is broke. So if you want to be broke, just keep doing what everybody else is doing. What we got? What else we got? Do I believe in tech? Yeah, I believe in tech. I believe tech. I believe tech is the future. I mean, the tech is now and the future. Well, I ain't even saying the future, but I believe in tech so much that my kid's custodial account, his investment account, is 100% in tech. It's nothing else but tech. Because, of course, he's going to live many, many years past me, and tech has advanced so far in my lifetime so far. Where it's going to be at in the future, only God knows. That's how much I believe in tech. Over 50% of my retirement accounts are in tech. Some individual stocks I own are in tech. I mean, yeah, SoFi is a bank, but they got a lot of things in the technology AI space that we talk about and trade on here. QBTS, that's quantum computing. That's tech. Oscar is AI of the healthcare industry. That's tech. Yeah, no, I have a big fund that's a tech. What else we got out here? For all you people in Texas, this is just a warning if y'all didn't know. They building a lot of data centers out there in Texas. Watch out for the weather and blackouts if that come out. Because y'all know how I get winters in San Antonio and in Texas, especially from that Dallas all the way down to San Antonio area. When it gets stormy, it gets wicked. So be cognizant of that. Of course, all these data centers is using up a lot of power. It's using up a lot of the resources that the state have. So be prepared. Don't be surprised if something crazy happens during a bad winter storm or something like that. But yeah, y'all building out data centers fast. I love the enterprise value of that for the state. Of course, bringing jobs to the state, but it's going to bring a wrecking hold on homeowners, just like it did when. Well, residents and homeowners is going to put a wrecking on them, just like it did that last winter storm when it was out for a while. What else we got here? Yeah, Microsoft, Apple, Google, 1997. That is one of the special places out there that tech was. That was tech at its infancy. If people had the foresight then in 1997, they made a killing. I mean, I know Steve Jobs, Wozniak, the CEO there now, they made a killing off of that. But yeah. What else? But that's really it, man. That's really it. I'm gonna wrap it up right there. I'm 33 minutes in the game. Usually I go for an hour, but I'm 33 minutes in the game. But yeah, success. You gotta win in life, man. Winning in life is not an option. Everybody just make bad decisions. We as humans, we make bad decisions, and then we sit here and go tell the people life is hard. No, we made it hard. When I was in the military and I was getting my paycheck and I was going out just drinking, buying clothes instead of saving and investing, I made a choice that made life hard. Now, and then when I fast forward and then I get out of the military and I'm just getting paychecks and then I'm just going out partying, clubbing, gambling, barely can pay the bills, I made life hard. When I knew that I couldn't afford to get a loan and just so happened they was giving out heartbeat loans in 2007, December 2007, and they let me buy the house. I made a decision. I can't blame Bank of America for giving me that loan. I knew I couldn't afford it. I made a decision. But I also made a decision that, hey, we're going to sell this house via Subject 2. So for all you people that just knew the Subject 2, I've been doing that out there since 2010. I sold the property via Subject 2. And then I reset. Or 2009 I did it. But yeah, and then I just hit reset. And then I made every decision after that on purpose, intentional. So the $800 I saved from not paying a mortgage or paying a rent, I invested it. Found a job that gave me more money. All the money that I made extra, I didn't let life creep happen. I didn't say, oh, I made more money, so I'm gonna go buy a car. I didn't say, oh, I made more money, I'm going to the mall. I invested it. Then I stopped working in the States and then started working in other countries. 100% of the money that I made, I invested. And I kept investing. Still to this day, all the money that comes into the house, 80% of it is invested. So I made the wrong decision that made life hard for me, and I made the right decisions later in life that make life easy. But if you make the right choice, life is not hard. We make it hard. Just like we can make it good too. So it's up to y'all. With all that being said, y'all have a good day, good weekend. Just a programming note, I will not be on next Saturday. Y'all know I don't sell, and it's not because of Thanksgiving, but the closest thing I got to a holiday is Michigan against Ohio State. And I hope Ohio State get belt put to their ass, you know. So that's what I'll be doing next Saturday at noon. I'll be watching Michigan, Ohio State, and hopefully we're going for 4 in a row. Hopefully we're going to beat Ohio State 4 years in a row. So, and I'm actually going to have a buddy from Ohio coming down to watch the game with me so we can talk trash. We usually at one each other's home. That's what I'm saying. One or another's home during the game. So he coming down here to watch it with me. So that's going to be pretty cool so I can talk crap and do my thing. But that's what I'll be doing next Saturday. So I don't know if I'll do a video on Friday, if I'll just skip it all together on Saturday or just do one Sunday. But just giving a heads up for the people that's out there, that people that actually get this information, use this information, and just not here just for shits and giggles. I appreciate the ones that are here for shits and giggles, but I'd rather people be using this information so they can make their lives better. So they can stop complaining about thinking the government gonna help them, thinking Congress gonna help them, thinking the city councilman gonna help them. I don't even know why. I mean, after all these years, people are still dependent on the government to hope that they're gonna make their life better. Only people that's gonna make your life better for you is you. If you don't want to do the work to make your life better, why would you expect somebody else to do it? With all that being said, I appreciate all y'all for looking in, listening in, and I will see y'all next time. Go Blue.